Bloomberg Audio Studios.
Podcasts, radio, news.
Lots of indicators over the last few weeks about how CEOs feel about their economy. And KPMG is the latest with this outlook. Couple of things that stood out to me. 87% of U.S. CEOs feel confident in the U.S. economy. 72% are looking to increase headcount this year. And the biggest risks are regulatory, operational issues, cybersecurity, and tax. Super interesting that inflation was not one of those biggest risks. Now, Romaine, what I also find interesting here is that the NFIB, the Small Business Survey, shows something very different.
Yes.
That overall survey is the lowest level since 2012. They're still looking at a super tight labor market, and they're still worried about inflation, and they're really worried about sales. And I'm wondering kind of where the discrepancy lies.
This has been a disparity for a while, and we always kind of joke about the big economy and kind of the real economy, if you will, Main Street economy here. That's a disparity everyone's trying to sort out.
And you can even see it in inflation, for example, or spending. Well, joining us for more is Paul Knopp. He's chair and CEO of KPMG US. Great to be here. Thank you for joining us. Tell us about the survey and the discrepancy that we see among the guys you survey and little guys.
Well, so I definitely believe that CEOs recognize the challenge with inflation. And we see geopolitical risk and cyber risk as being near-term risk. And the near-term risks keep evolving. 4 years ago was the pandemic. 3 years ago was the Great Resignation. But two, sticky inflation, a really tight labor market are structural things that we think are going to persist for quite some time. And when I say sticky inflation, what I mean by that is inflation has been reduced quite a bit. But at the same time, it's in that range where it seems to be difficult to believe it's going to get back down to 2% anytime soon. So that is a challenge. Now, in the face of all those geopolitical risk and structural changes, we also have a lot of confidence from CEOs, as you noted. And I think a lot of that confidence comes from the fact that the economy has been very resilient, and we've navigated these challenges quite well the last 4 years.
So with both the small and the big guys wind up having tightness in the labor market, how are the clients that you surveyed managing that?
Well, certainly, as you think about going forward, you're trying to make your workforce more productive and efficient. One of the things that we found in our study is that generative AI is in the plans of many CEOs to try to ensure that we get to that point. Also, in some cases, CEOs are not going to be requiring college degrees. They're looking at alternative hiring models, their service delivery models. So
when you say, though, they're not requiring college degrees, so you're talking about basically lowering the standard. So that seems to suggest they're still having trouble finding.
So I think we've gotten very comfortable, Romaine, upskilling, reskilling people. So I don't so much see it as lowering standards, but really good people that can be upskilled, reskilled to help us get after some of these shortages that are in the market. And again, I think some of these shortages will persist for quite some time.
But they are still in that hiring mode. They still need a reason, and they see sort of potential to increase headcount.
Yes, I mean, of that study, I think it was 32% of CEOs said they would significantly increase hiring in the next 12 months, 40% modestly. Only 4% said they'd be reducing the workforce.
One interesting thing, though, that I saw in the study was that a lot of folks are sort of taking a wait-and-see approach on a lot of things in their business until they see the outcome of the U.S. election. Not necessarily on hiring, but certainly on M&A and some of the more strategic moves that they would be making.
M&A, major capital expenditures, 62% of CEOs reported they would wait until after the election to make those kinds of decisions. And I think it's layering.
But is that different? Because I'm always told that for a lot of folks, elections don't matter. At the end of the day, U.S. policy, while there are changes based on the new president, generally speaking, the overarching policies we have are relatively consistent. Is it so opaque right now that people just feel they cannot make those decisions?
No, I think what it is that the two biggest obstacles to more M&A right now are higher interest rates being one, and then if you think about the valuations of companies, shifting valuations, multiples are very high. Those are huge obstacles. That's what our survey showed. I think that the election just adds one more layer of uncertainty and complexity onto the M&A market, such that everyone's trying to figure out, what will it look like after the election, and will it actually present a better environment for actually doing M&A? I would say too, though, Romaine, that there's a lot of cash on corporate balance sheets, a lot of cash at private equity, and it's the market's going to come back. It's just a matter of the duration of this softness.
Before we let you go, there was one other thing that we both found interesting. Only a third of CEOs expect people back in the office 5 days, down from nearly 2/3. Man, we've been here 5 days for a long time.
Like the tiniest life.
I know. Really?
So, Alex, it's really interesting. We did that same survey a few months ago, late in 2023, and 62% of CEOs at the time said that employees be back in the office 5 days a week over the next 5 years, and it dropped, as you said, to 34%. A remarkable finding. I think what that means is that hybrid is here to stay, and hybrid can be anything from 1 to 4 days a week, theoretically. And I think we're all getting more comfortable with the productivity of our workforce, and we're not at optimal when it comes to hybrid environments, but it's an environment that we're all more comfortable with moving forward.
All right, Paul. Well, this is a really illuminating.
Broadcasting from home. That's what we'll do.
Bite your tongue. Paul Knopp, Chair and CEO of KPMG.